Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit about altcoins and altcoin risk. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates about indicators and more over there. So I wanted to wait a bit until some of the dust started to settle from the FTX situation. Not saying the dust has settled. There's probably a lot of contagion that's yet to work its way through the system. And I think we're going to see the reverberations of this catastrophe for quite a while. But the market has sort of calmed down. The extreme volatility has calmed down a bit, at least for now. So I want to just talk now about where do we go from here thinking about altcoins, because in bear markets, altcoins tend to get absolutely destroyed. And we saw this recently, altcoins got absolutely hammered in the wake of FTX, some more than others, of course. Solana dropping 43% in a single day and then down even more than that, over the last several days. So let's go ahead and talk about that. So the first thing I want to talk about in this context of altcoins is to talk about risk. And to do that, I want to pull up this version of the UDPI that I've introduced before. This is the average UDPI across all the assets that we track. So most of that's going to be altcoins, but then Bitcoin is included in this as well as Ethereum. Now I put the Bitcoin price in the background here just so we can kind of see where things are happening in the market cycle. Most people are familiar with the Bitcoin price and kind of when things happen. So that's just kind of there for background. But again, this UDPI is the average UDPI of all the assets that we cover. So, we cover things like, XRP, Solana, Algorand, HBAR, Link, a bunch of different things from a bunch of different sectors, right? We have things from the metaverse, alt L1s, gaming tokens, all that kind of stuff goes into this average. And then what it creates is this interesting composite. So this is the long-term version. This is averaging across all the long-term UDPIs of all the individual assets. What you see is it does a pretty good job of identifying these overheated points in the overall crypto market, right? Getting up to these kind of these extreme kind of peaks, and then also these lower points as well. And again, this is the overall market, so it's not necessarily going to bottom right when Bitcoin bottom, because again, it's not just looking at Bitcoin, it's looking at everything. But it does a good job of even identifying, for example, back over here as being a fairly risky point, significantly more risky than something like 2019 was, for example. And then, down we have gone. The thing I really wanted to point out about this, though, when we look at it, is what's going on right here. So you can see that we actually got to a pretty low level of long-term risk. And again, that's kind of months to multiple months. Where it's saying, the downside in the kind of coming months to multiple months is kind of tapped out here. And that's what we saw back in June, right? We ended up kind of having a bit of a relief rally here, and then more or less going sideways. And then it was only once the UDPI had kind of reset to some degree, had moved up more towards neutral, kind of building in or pricing in the possibility for more downside. Basically, the floor was kind of falling out beneath us, and then also we were realizing a little bit of upside potential. It was basically saying that the possibility of something like this was rising. It's not to say that it was guaranteed, right? The FTX collapse is something that not a lot of people saw coming. It's not something that had to happen if FTX wasn't playing fast and loose with customer funds and basically committing rampant fraud across the board. We probably would not have seen this capitulation here as we did, this move down to a lower price zone in the crypto market. But essentially, what the model was picking up on was that what it was observing was going on here is saying, all right, the possibility of further downside is rising. Doesn't necessarily know what the catalyst is, but it's saying that this kind of thing could happen. And that's exactly what we ended up seeing. But what's important is that we still have more room to the downside. We're still above the level we were back in June, even though, Bitcoin and some other assets have hit, new lows for this bear market. But of course, some assets haven't. Ethereum, for example, is still above its June lows. But it's saying that further downside could be possible. And that's really the key thing here, especially when we're thinking about altcoins. And again, this is a lot of what's going into this composite is altcoins. There's more downside in the coming months that the model thinks is realistic. And this is true across time frames. This is long term. Look at medium term, which is about moves that play over kind of weeks to months, or weeks to a month. So much kind of more medium term in its focus. Similar thing that we're seeing here. So in the coming weeks to multiple weeks, maybe month, couple months, it's still seeing a similar story where June was a relative low point. We ended up bouncing, but that is now saying that there's more downside to come. And you can see how risk had really reset in this kind of a relief rally, then leading into what we've seen right now. But again, importantly, we still have more plausible room to the downside in the coming weeks to months. And finally, the short-term UDPI, which is a little bit more sensitive to moves that play out over days to weeks, so even shorter in its time horizon. telling us a very similar story. You can see that, in fact, over here, the June lows didn't even get down to as low as levels like, the March 2020 crash, not even as low as the 2008 bottom or the bottoms that we've seen back in some of these prior bear markets back here. And so what this is again telling us is that in the coming days to weeks, more downside is again plausible. We still have more room to the downside. And so that's something that I think is really important just to keep in mind, is that even though there's more upside than downside potential that the model thinks is plausible across these timeframes, it still has that downside that's there. And given all the disasters and everything that's going to fall out of FTX, we can't ignore that downside. Seen some people trying to call this the bottom, like the capitulation. I think that's way premature. And, given how bearish everything is, we can't ignore this downside that exists. Obviously, if for some whatever weird reason we went rallying, there is room to the upside that could go, but that is absolutely not my base case based on what's happened with FTX. The contagion from this is going to be playing out over months. In my opinion, the best that we can hope for is sideways chop, not a meaningful rally back up to prior significant levels, and especially not back to all-time highs anytime soon. Not financial advice, of course, you make your own determinations, but that's my base case as I'm looking at the markets. So if we do have relevant downside left for altcoins, then how should we start thinking about altcoins in terms of their prospects right now, both kind of shorter term, but also longer term? And when I'm thinking about altcoins, one of the questions that I'm thinking about right now is that one of the more important decisions that we kind of need to make is which altcoins are even going to survive the bear market, right? Forget about ones that could perform well later. The first thing we have to figure out is, are they going to survive? We can debate later which ones will thrive, but which ones are even just going to have the potential to thrive? And what are things that we can look at that kind of we can evaluate what the value proposition of a given asset is? So that's what I want to talk here in a minute about. So first off, I just want to kind of talk a little bit about fundamentals in crypto and how we can evaluate it. A lot of people will throw out the trilemma as being kind of three different things that you can look. This is more applicable to layer one chains, although it can be applicable to other ones. Kind of any standalone blockchain will have these features where, you've probably heard of this kind of set of three, where you can have how decentralized is the network, how fast is the network, and how secure is the network. And this is something that a lot of people use to kind of weight different chains against each other, especially, L1s. But, you'd also do this with Bitcoin and basically any kind of standalone chain. Bitcoin, for example, very decentralized, slow, but also very secure. That's kind of its proposition. So it excels in decentralization and security, not great at speed. Whereas you can take something like Solana, which is extremely fast, but not very decentralized, or limited its decentralization, and also sacrifices a bit on security. So this is that whole trilemma, where to get one, you kind of, or to get any two, you kind of have to sacrifice on at least one, kind of an idea. And this is something that a lot of people use to kind of, in their valuation of networks sometimes, is these kind of factors of it. And that's all fine and good. I don't have a problem with that. I think these are all important things to keep in mind. I want to, though, propose something that's slightly different to that. So what I want to propose is that there's other factors we can think about as well with a protocol that can actually give it some value, or at least keep the price afloat, stop it from maybe going to zero, keep the project alive. So let's talk about what those are. So the first thing that I sometimes think about is utility. Now, utility would incorporate those three we just talked about: decentralization, speed, security, because all of those feed into how useful is this at all. If it's like a super slow, not at all secure, and not at all decentralized, it's not very useful as a blockchain. So that all feeds into this, of course. But the other question is, what is the thing that this is solving? What is the problem this is solving? Is it some kind of important real world problem this is solving? Is it some problem that doesn't really matter, that no one really cares about? That matters too, because it's something that no one really ultimately cares about in the depths of a bear market, when, really it's probably going to be the strongest fundamental value or assets that survive. If there's something that has no real actual utility, even if it is really, secure and decentralized, or, whatever the case may be on that side of things, it's not really going to matter very much. So that's something to keep in mind here. It's just that kind of basic case. And I think that's what most people think about with fundamentals. Think about what's the utility proposition. But another thing I think it matters as well, and that can give an asset staying power, is just adoption. Just how many people are using it? How many people are invested in it? Is it having this kind of actual usage in the space? So Ethereum, for example, one of its big selling points, in addition to the utility of having all the DeFi and everything on it, is that people actually use it. Tons and tons of people use Ethereum for different things. They use it for, NFTs, they use it for DeFi, etc. Tons of protocols built on top of Ethereum. It has a ton of adoption, and that gives it staying power, right? Because if people are using it, then even if not all of them continue to use it, probably some of them will, and then that hopefully would give it the strength to last through, a protracted bear market. So that's something that I also think matters. And the final thing that I think can matter as well with a project, and this one is, I think it's an interesting one to think about, and that's community built around a project. So take Bitcoin, for example. Bitcoin has a very strong community built around it. It has, the Bitcoin maximalists, the people who come hell or high water will stay with Bitcoin no matter what. They're going to buy, they're going to hold. They're not abandoning the protocol no matter what, basically. Same with ETH maximalists. They're in it for the long haul. They don't care about price action. They don't care where it goes. They're going to continue buying, using, holding, etc. And then there's some other ones as well. You can think about a lot of meme tokens as being mainly community driven in their value proposition. That's kind of the only reason they're around. A lot of people have gotten into it. A lot of people, are kind of engaged with it. Maybe they made it part of their identities. They are kind of connected to it, and that's what gives it its current value. Now you can argue about the relative relative value of each of these three, right? Is utility more important than adoption, or more important than community? That's obviously, something that's up for you to decide. And I'm not saying that these are the only things, or that this is necessarily even the best framework to think about this. These are the things that I just think are useful to look at when we go and evaluate altcoins, and why, some of them might be holding up as well as they have, relatively speaking, versus some others. So that's where I want to go ahead and pivot over to now. Let's just go over here in CoinMarketCap, just look at some different assets in the top rankings of market cap here, and just think a little bit about maybe why they're here, and then speculate maybe about, how much staying power that should have going into the future. So I think Binance Coin, BNB, is a really interesting one to consider from this kind of framework of utility, adoption, and community. Because BNB is one that doesn't really have a community, right? You don't see BNB maxis, or if they are out there, there are not very many of them. You just don't really hear about them. But the thing that BNB does have is utility. It is a very fast chain. That's cheap, easy to use. It's not very decentralized, and of course the issue with BNB is that there is the risk that so tightly tied to Binance. If anything ever happened to Binance, then BNB is probably going to blow up also. But that kind of tail risk aside, it is useful in that it has that utility, and it's providing an L1. And we already know L1s. If Ethereum is useful for being an L1, then other L1s have the potential to be useful in the same way. And then the other thing that BNB has going for it is it has a lot of adoption, right? BNB is sitting at, number 2 in terms of DeFi adoption. If we look over here at DeFi Llama, number 2, it's taking over that spot back from Tron. And so there's tons of protocols on it. Presumably a lot of people are using BNB. And so if we're thinking about why is BNB number 5, why is it the second largest if you consider ETH an altcoin, second largest altcoin, or if you don't consider that, it's the biggest altcoin that's out there. I don't count stable coins. Why is it the case? In my opinion, it's adoption and its utility. That's kind of the things that are holding BNB up there. And so if you're going to make a determination of, do you think that BNB is going to survive the bear market, then those are factors that you have to weigh. Now, obviously, BNB has the other issue where, because it's so closely tied to Binance, if Binance is doing well, then BNB is probably going to do well also. So there's that kind of factor as well. But that again might be kind of feeding into that adoption bit a little bit, maybe into its utility. Exactly where that fits is a little bit. That doesn't fit super well into that framework. But again, it's doing well without any community. But then you look at some of these other assets, and you actually they tell a different story, right? XRP and ADA, I think, are similar, that they have very strong communities behind them, right? There's a core of people who just love the protocol. They are XRP people, they are Cardano people, and they're in it come hell or high water. That's who they are. It's part of their identity. Whereas, with Cardano, for example, we think about adoption, that's one place where it is kind of lagging behind. It's had a lot of issues in the rollout of its ecosystem. We can see it's sitting all the way down at 31 on DeFi Llama in terms of DeFi adoption, behind much smaller projects or a lot newer projects that don't have that kind of community behind them. But yet they're still doing, Cardano is still doing very well. It's still sitting up at number 8. It's outlasted Solana, which has now fallen way below. It's above Matic, Polygon. It's the number 2 layer 1 chain on here, if you don't consider XRP a layer 1. And that's pretty useful, right? That's an interesting observation, right? And so in my opinion, I think community is doing a lot to help ADA here. And so then if you're going to think about, is ADA going to survive into the future, really you have to maybe question, can ADA's community, can Cardano's community persist in the future, even in the face of lower prices, right, of unimpressive price action? And that is kind of its value proposition. I mentioned with meme coins, you see Doge sitting all the way up here at 9. Again, I think community is a large driver here. I mean, maybe adoption if you consider just the number of people who hold it as being a factor. But the thing with something like Dogecoin or also Shiba Inu, which is down here at 14, there's just a lot of people who just, believe in it. They believe at some point it's going to go crazy and they're going to make a lot of money. So they're happy to just throw a bit of money in over time. So there's this kind of community of believers maybe around some of these meme coins that just keep them afloat, that people are still willing to dump money into them because they think eventually it's going to go pumping to the moon. And there are probably some people who had really good experiences with them in the past, so they think it's going to happen again. So that's then the question again, is as lower prices come, will those people stick around, or might they head for the exits? And that's again the question then of, can they survive or do well at least going forward? That's the question, is can they survive just based on that? So I think you can do that analysis with really kind of any number of these different assets here, and they each tell a different story. But when you're going to evaluate it, I think a lot of people just only look at that utility piece, right? They only just think, what is the technology? What is the kind of theoretical possibility with this from that perspective, the theoretical utility, but totally ignore adoption. And again, you can have the best utility in the world. If no one uses the protocol, then the protocol is worthless. And then also community can matter too, because you can have something where the utility is not fleshed out yet, but has a super strong community, which can keep it strong and afloat for a while, potentially. So those are things that I think are really important when we're thinking about altcoins and their staying power. Now, I do want to stress again that in the short term with every single altcoin, I personally, again, not financial advice, but I'm personally extremely cautious, because what happens in these types of environments for altcoins is they get destroyed. They do way worse than Bitcoin. They'll do way worse than Ethereum. They will just keep kind of steadily dropping down further and further percentages from their all-time high. Getting some of them are already down 90-95% from their all-time high. They can keep going. And in my opinion, they probably will, especially if we get a next leg down for Bitcoin. Then I think lower prices are very likely. Now, again, nothing in crypto is guaranteed. And so, this could age horribly. This could be the bottom and everything's going to rip from here. Not at all my base case, though, based on how bad the follow from FTX is looking like it's likely to be. But then if we are thinking about altcoins and ones that maybe, for example, you'd want to DCA in at lower prices in the bear market to try to ride it in the bull, that's when I think evaluating it from some of these frameworks is really important. Because if you're going to DCA into anything, you want to at least have a confidence that it's going to be around for the next bull market, right? You don't want to DCA into something that might just disappear. Or kind of the next step then is you probably want to DCA into something that at least that you think can do well in the next bull market. Even if it survives, if it just kind of has a short-term rally to nowhere near its all-time high, below whatever your cost basis might have been if you had accumulated, during the last bull run, not all that useful of an investment. So then what I think was really important then is thinking about those different factors that feed in to what might be giving an altcoin its value, and determining if you think that that's good enough, right? Is that good enough to last it through the bear market? So again, I'm not saying that utility, adoption, and community are the only things to care about here, but I think there are ones that are important. And so if you're kind of thinking about those, which ones of those do you think are more important? Do you think utility is more important? Do you think it's a combination of utility and adoption that's most important? There's some other combination? That's something that you have to make your mind up on. And so I'm not going to, say one way or the other too strongly of which way is better. I will just give my opinion, though. Again, this is just my opinion. It's not financial advice. Not saying that you should be making your decisions based on this. I personally think that community is probably one of the more shakeable parts of it to some degree. Adoption can fluctuate also, of course. But I think community can have cracks in it, especially depending on why that community exists in the first place. If a strong community crops up during a bull market, then, what's probably happening during that bull market is that all these people who like it kind of get together. They get together on Reddit. They're on Twitter all talking to each other. And everyone's feeling really smart because the price is going up and they're doing well because they bought in. And it kind of just reinforces itself, kind of becomes this echo chamber where everyone's just kind of patting each other on the back saying, this is the best thing ever. This is going to be the next Bitcoin. This is going to make us all millionaires. But then you run to the bear market and price now just keeps going down. then at a certain point, some of the people who join in the bull market might start to get disillusioned. They might say, wait a minute, this isn't what I signed up for. I thought things were just going to keep going up. I thought this was the best fundamental asset. How can it possibly be down, 80, 90% from its all-time highs? And then the longer the bear market goes and the more that price kind of continues to grind down, maybe the more stress and strain gets put on that community and it might be able to fall. So that's one where personally, I think that community can show a lot of weakness depending on the asset. Bitcoin, for example, I don't think that's going to be the case in this bear market. I think that the Bitcoin maxis are going to stay Bitcoin maxis. There might be fewer of them if some people were jumping on the bandwagon in the bull market, but I don't think that community is going away. But for some smaller altcoins or younger altcoins, that's where I'd be a little more skeptical, because they haven't been battle tested. Those communities have not been battle tested in a bear market. So it's unclear if they're going to stick around. And if that's really the thing keeping it afloat was the community around it, once that's gone, then the asset itself is probably going to go along with it. So that's just kind of my opinion. But more generally, what I'd say is that whatever factor seems to be giving an asset its value right now, really then what you'd want to do is kind of keep an eye on that factor. And if that factor starts to change, that probably then should change your thesis. And the final thing I wanted to say in this video is that I think bear markets are the time where you have to be most critical about your thesis in any altcoin, right? For any altcoin you hold, you probably have some thesis for why you're holding it, right? For why you think it's worth holding, especially right now in a bear market. But because of bear market, altcoins can continue to drop 50%, 50%, 50%, on their way down to, 90, 95% from the all-time high, 99% from the all-time high. 50% drops can happen in each of those increments. Because again, you're going from you're measuring from the all-time high to get to that 99 number, but you could go from 6 to 3, that's 50%, then 3 to 1.5, that's another 50%, etc. And so if you're looking at an asset and if you're going to be willing to maybe stomach that, if you're DCAing in and stomach the fact that the prices might drop out below you really far, you have to be really sure that your thesis is right? Because why else would you do that? Why else would you risk, putting your money in something that could drop, massively, even from these levels? That's something that you have to really think about. And I see this all the time in the crypto space, and it's something that I think is really unfortunate. It seems like a lot of times people let motivated reasoning guide their decisions instead of logical, cool, cold analysis. And what I mean by that is that, for example, people might get kind of hooked up into a community around some asset. They might start to feel like they now need to be loyal to that asset. I think loyalty is a thing that kind of gets misused in the crypto space a lot, because generally loyalty is a good thing. But when it comes to investment, it's really not a good thing. An asset doesn't care if you're loyal to it or not, right? BNB doesn't care if you're loyal to BNB or not. The price is going to move one way or the other. The market doesn't care. You're not going to be rewarded for holding an asset as it drops 90% from its all-time high. No one's going to reward that loyalty, right? And so if that's the case, then loyalty is not something that we should be really worrying too much about here, right? It should be all about, is this really a sound investment from a cool, logical perspective? And if it's not, even if you've been into that community for a long time, maybe it's not the best asset to be in anymore, right? It should be that cool calculation that gets you there, not this motivated reasoning or this worry that, I'm not going to be a good X holder if I sell. Because that's just ridiculous. That's going to be an easy recipe to losing money. It's lost tons of people tons of money already. So again, these are just my thoughts, but that's just something I wanted to say here, because I see that all the time, getting on my soapbox a little bit, but I see that too much in this space. And it really is unfortunate because it costs a lot of people a lot of money unnecessarily. So that's just what I'm saying here, is that for theses, I think it's important for us to always be going back and questioning, why are we bullish on an asset? And if that thesis is no longer the way it was back in the bull market, if that has now changed, then maybe that should change how we look at the asset as well. All right, so if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, but indicators and more over there.